welcome back to Legal Chunks, and today I'm going to be talking about how to trade New York session. So, got some tips for New York session trading. Let's get straight to it. So, the first tip I got in day trade New York session is structure. So, I'm going to keep it very simple. Structure is the way in which the market moves. It moves in a structure. What you're looking at now is a diagram of a bear structure. Looks like a lightning bolt pattern, kind of, or something falling off a cliff, but this is a bear structure. Now, when you see this, this is representing this area here will be a lower high. And this one on a 4-hour chart, we will see 4-hour charts. So the market will make a bearish impulse or a strong bearish push of a collection of bearish candles that break support, retrace, and then make another strong bearish push to break support. Now, the thing about bearish structure and impulses is that we are expecting the market to continue bearish. And while doing that, it's going to retrace somewhere inside of that impulse. Now, inside that impulse, the main area we like to hit is the beginning of the impulse. The beginning of the impulse is the strongest area with the most sellers. In theory, that we're expecting, hey, the price gets here. We're going to expect it to do this, come here, boom, start that next push. Now, for people who say, why is the most sellers here? Well, the last time the market got to this point, there was a strong bearish push, meaning there was more sellers, right? And this is likewise if we were to say invert the scale and look bullish. This is what we will see on the bullish market. So bullish impulse, and instead of this higher lower high, we will be seeing a higher low, of course. We're going to invert the chart so you can see how you can use this to help you catch pips. Now, let's go to NAS Wednesday. So we are going to be using the replay feature for anybody who, is adverse to it. So coming into the charts, we're going to trade Wednesday and Thursday. Just show you how powerful it is to trade 2 days. So looking at the 1-hour chart on NAS100, what we see is that we have a multi-candle pullback here before rising up and making that high. And we're going to go higher low, 1-hour chart there. Zoom in for you. So looking at the 1-hour chart, we can see that this was the last multi-candle pullback before making a bullish push. And once it did that, comes back down, actually failed to make a new high here. So this is technically a failure swing. Market comes back down. Doesn't quite go to this area here that you could expect to be the zone, but it does visit this area that is actually a nice zone, right? Then it pushes up from that point, and that happened around 1 p.m. on Tuesday. We're going to remove that and just focus on the structure point. So coming into Wednesday, the very important tip I want you to know is that I do not trade until 7 a.m. So I trade 7 a.m. to 12 p.m. noon. So let's just move to that time. 1, 2, 3, 4. And then what you'll see is this is, what time is this? This candle, it says 3 a.m. So that means it opened at 3 and closed at 4. So this closed at 4 a.m. This closed at 5 a.m. This candle opened at 5 a.m., closed at 6 a.m. This candle opened at 6 a.m., closed at 7 a.m. So now we're looking for day trading time frame. So I'm going on to the 15-minute chart. So on the 15-minute chart, coming to the charts, I will see very clearly that this was a strong impulse right here. If you can follow me. This area here was a strong impulse that validated this last multi-candle pullback, which was right here. This multi-candle pullback that led into that new high. And then the market began to fail to make new highs. If you're going to make higher highs and higher lows, you shouldn't fail in your pushes to make highs. That's telling us that there's not enough buyers in the market. We're going to do a higher low 15-minute chart. So this push here is what we're going to highlight. Now we're thinking, oh, this is a lower high to lower low. So this area here should at least get hit. If we're going to continue lower based on how structure, remember structure wants to go lower, this area should at least get hit. Not only that, we have a zone here. And we can see price is failing at the zone on the 15-minute chart. Now, next, we're going to look at support. We see this support is broken. So now we have a support broken on the 15-minute. and this is the last impulse. So the same way this was an impulse here, we're looking at here for the last impulse. We're internally inside of the structure. Structure is inside of structure is inside of structure is inside of structure. So we're gonna break this, and now we're gonna look. Excuse me, gotta move this. Now it's 6:30. This candle closes at 7 a.m. So let's go on to the 5-minute chart to get more active and see more detail. Okay, so we can see support was broken here. Support was broken here. Strong bearish impulse. And we also can see what? Well, we see that there was this candle here closed lower than this, meaning that this is a structure point. So this will be technically here, lower high, because it made a lower low. Technically, because it made a lower low. Now, what I want to do is grab my vertical line and go 7 a.m. all the way to 12 noon right there. Inside of this range, I'm expecting for setups to occur. I'm expecting to see trades. So we go lower high, 5-minute chart. Now, what could move the market down? Let's let the market play out, because currently we see lower high to lower low. We're going to expect this area to at least get hit and continue making bearish structure. So what we see next is market pushes down. Nope. Market pushes. So now we see this strong bearish push. And upon seeing this strong bearish push, we have to always remember we're day traders. So we have to go through those day trading time frames of 1 to 15 minutes consistently. We can see this is the lower high on the 15 minutes. Well, the 10-minute that was violated and breached. And I know this video is kind of in detail. I may just go over Wednesday. It might not even go over Thursday. But lower high 10 minutes. So this lower high did have a zone. Now remember, we want to trade like this with the market. If it comes back to that zone at the beginning of the impulse, we want to be entering there, expecting the market to push bearish. That's what we're doing. Simple model. So what we got, 10-minute chart. If the market comes here for all my, for all my limit order traders, we will enter the trade. Okay, let's go back to the 15-minute chart, go back to the 5-minute chart. Now let's watch and see what the market does. And we're going to go back full screen. Remember, this is our target from 15-minute chart. Let's watch how this market plays out. So at 7:25 a.m., you're in a trade at about 7:20, you enter the trade because the zone is hit. So we're going to go do this. Boom. Now let's continue to watch how the market plays out. Now you're in drawdown. People be scared. I'm going to close the trade. I'm in drawdown. We just let the market do what it's going to do. Now, strong, violent push down bearish. And what do we see now? We actually see that that structure point that was here, see this gets lower. And now we have a clear multi-candle pullback, push down, and this is the newest lower low, and this is the newest lower high. So we're going to highlight this area and say, okay, if the market comes here, now this is stacking. If you want to stack your trade, you can. I wouldn't recommend stacking because sometimes the trend can be reversing on you and you got a lot of trades in, you don't want to really do that. Trading is really all about risk management. But for the sake of being as consistent as I can be with this example, we're going to say, hey, if the market comes back here to this zone, limit order. Now we're already in profit on this trade. We're just saying example purposes. Now let's watch. Market goes straight up, passes it. Now this doesn't look like it hit it, but we're going to say this is a loss because although it did not, let's see, easy way to look. It did not touch it. The spread more than likely would have got you up out of there. The spread would have more than likely got you up out of there. So looking at this trade, we're going to say this is a loser. Okay. So by that being a loser, I'm going to move this up. You're currently 0-1 on it, and this is actually TP. So you're currently 1-1 on the trade. Let's continue to watch, see what's going on. Boom, boom. Multi-candle pullback. 1, 2, 3. Then the market begins to go down, make us a new low, which will mean what? Well, that would mean that on this 5-minute chart, and we can be going through different time frames, the 10-minute, the 15-minute, 1 hour, 3, 2, 1 examples, but let's stay very consistent and stay on this 5-minute chart for the sake of time. Okay, 5-minute chart. Now, if the market comes here with the bias in our head that the market is going to at least hit this this line that I highlighted from the 15-minute, we would expect to sell again. Market doesn't quite get there. Let's continue to watch, see what happens. Market is continuing to fall. Now, this trade here that is a 3-1. It is smashed. Let's continue to watch. Okay, now we have a beautiful trade. This ended up being a beautiful trade, and it's about 140.6 R trade. But we're gonna just keep it very simple and say we're gonna say that one trade here, you're 1-1. Continue to watch the market. Remember, we have until 12 noon to trade. So now we're here. Once he came to pull back, boom, boom. If the market comes here for all of my limit order traders, remember, I don't use limit orders. I'm going to say that consistently. This is the new lower high. So if the market comes here, I'm going to expect the market to do what it did previously, because although it's already hit target, this market is going very violently bearish, making bearish structure. Let's watch and see what happens. Market has tapped it. So now you're in this trade. There's nothing you can do about it. You're in the trade, limit order traders. Boom. TP hit. So your take profit was hit. And we're going to move this over here. And not only are we going to move this over here, we're going to move this to try to keep it cleaner. Let's continue to watch. We see we have another zone here. Now, do you want to take this trade as it comes to the end? Let's just be very consistent and say with the rules, we will take the trade. Come here, limit order traders. Boom, boom, boom. Let's watch. Boom. That's a loss. So you lose this trade. So on this day of trading, let's continue. Let's keep going. Boom. And no, we're done trading now. The trading day is over. 4 trades were taken. You watched them based off limit orders. And we got 1, 2 winners, 2 losses. And this first trade that we took, if held on, this was actually a 8R trade. Okay. This is actually an 8R trade of 184 points. So that was a beautiful trade, but we're going to just stick with the 3% win just for the sake of purposes of being consistent. So let's just add this up. We're going to say we have a plus 3R and a plus 3R and a minus 1R. Minus 1R. So adding this up, we got plus 3R minus 1R plus 3R minus 1R. So 6R minus 2R means this is a 4R day. For all my prop firm traders, if you have a 100K account, you just did 4%, meaning you just made 4K profit. Right? Simple. And that's based off limit orders. That's a 4K profit on to the next day. So trading day is over. Yeah, so you had a 4R day. Great day. Now, if you want to look at how I was drawing structure earlier, let's look at the line chart. What we see is structure. Boom, 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 boom. Structure. Same thing. Now, let's go ahead and happen to look at Thursday. So we're going to go back to the 15-minute just to look, see how it played out. Notice how on the 15-minute chart, that area we were targeting based off this potential reversal, because if we're making higher lows and higher highs and the higher low breaks, we're going to say, well, this is a transition. Notice how the market continued to attack that level, making a lower low. So we got a new lower, higher, lower low. But let's go up to the 1 hour chart just to see clearly. Now we can see a clear impulse. We can see that 15-minute, a higher low. On the 1 hour, it's broken. This impulse broke it. Let's continue. Remember, this is still Wednesday. We're not trading until Thursday. Also, understand this. This level was broke. We can delete this, remove this. New day, Thursday. We know we don't trade till 7 a.m. So we're going to boom, 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 4 a.m., boom, 5 a.m. closes at 6 a.m. Excuse me. 6 a.m. closes at 7 a.m. Now we are coming to the charts around this time. Now understand that we came to the charts. We already saw this level was taken. So the next level, I'm going to target this now because there's nowhere else for it to stop. This is the lowest level of price that actually someone bought it. This wick that you're looking at, people just look at it, oh, these are wicks. No, if someone bought that low here, someone actually bought that price. It's going to be targeted when we now come back attack and bearish price action. What I mean by that is when we're starting to get bearish structure and supports are being taken out, it's going to target the next wick more than likely. Okay, more than likely. So understanding that, I know I had a lower high to lower high already to a lower low. Now I am trading. It's my trade time. It's going on to the 15-minute chart. Going on to the 5-minute chart, as you can see, two candle, multi-candle pullback. This will be the 15-minute structure right here. On to the 10-minute, multi-candle pullback. 5-minute, there's a sooner multi-candle pullback. So I trade at 7. So let's get by 7 a.m. Boom. Let's get known. Boom. So that's my window to trade. And what I see here is a, hey, 5-minute has a zone there. The 5-minute has a zone there, and this is a nice push. There's a multi-candle pullback. So limit order traders, let's watch the market. Boom. So this candle happens at, this candle is actually opened at 7. So you could be in this trade already because it opened literally at 7 a.m. Let's go down to the 1-minute chart just to look at it. See, 7 a.m. this market opened. So it actually tapped it again at 7:02, 7:03. So this is what you could actually manually take this trade. But if you don't want to, you could be a limit order trader and say, hey, I'm going to take this trade. You actually should already be in this trade. Boom. What are you targeting? 3 to 1. That's it. But expecting it to at least hit there. Now you're in this trade. We're going to watch and see what happens. Boom, 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 boom. Now marketing tapped it again. What's the odds? So if you didn't get this trade earlier, you would have been in now. Let's go down. Boom, boom, boom. Boom, 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 boom. Take profit hit. So now you're 1-0 on Thursday. New day, 1-0. Great feeling. Got to be a great feeling. Let's continue to watch. Multi-candle pullback. Makes a new low. We have a lower odd that's confirmed. Let's continue to watch. Now, if the market does come back to this zone, you're looking to sell it, limit order trader. Boom, boom, boom. You're looking to sell it. Target is already hit. Now, understand when these targets get hit, these can cause retracements in the market because a lot of people are going to be taking profit. So if people in sales take profit, it's going to cause the market to be buys because people are going to buy up their sales as they close their orders and take their orders out. Now, don't look at this as like a take profit because remember, it never came back here. So multi-candle pullback. So there was never a trade back to this zone. Here's the next multi-candle pullback. We're going to go here. We're going to delete this zone actually. And this was actually a zone. Should have been a zone here. And this is a reason why I don't see this would have been a zone. Broke straight through there. So now that it broke straight through there, our target has already been achieved. So we can be thinking retracement now. Let's continue to watch. Now this would have been a loss, limit order trader, because I'm pretty sure. And the reason I keep saying limit order trader is because I don't trade limit orders. So it's very consistent. Like no one can say I'm just picking the orders. I've given a pretty much a strategy or a template to use. So this would have been a loss. So now you got a loss and a win, and it's still 9:40 a.m. Let's continue to watch. Now, if the market comes back here, we want to buy that because this will be a break and a retest. So let's hit this level because this area that used to be, in mind, you don't have to use that. You can use just beneath the zone, right? But this area that used to be a lower high acts often as a key area of kind of what was a supply becomes demand, which would mean a buying area. So we're going to watch this. Make this zoom in. Make it interesting. That was a very strong push. Market hits. Now you're up. Look how fast that was at 10 a.m. Take profit hit. So now you are 1-0, 1-1, 2-1. And let's continue to watch the market. Make this smaller. We understand we got a higher low to a higher high. We understand that we could potentially be trading here next. If the market is going to keep going bullish. And if it does keep going bullish, we have to say, well, there's two zones actually. So let's can't ignore this one. Boom. And not only that, we have to make sure we're siphoning between time frames. 10-minute chart, very ugly. 10-minute chart, you can see this with the lower high here. It broke, it retested, then went bullish. We see some type of wick area here. Let's go to the 15 minutes, see what that is. Zoom in, what we can see is that this is a black candle, meaning that this is a zone. Meaning that there was no multi-candle pullback until this level here. So we could still be thinking bearish. Now, I don't want to confuse anybody, but the thing you need to understand is that 15-minute structure impulses or 15-minute structures have smaller time frame structures occurring in the inside of them in order to create the next move on the 15-minute chart. I hope that ain't confused nobody, but if you got a 15-minute bearish impulse and it's retracing, I mean the smaller time frames have reverse bullish. They have to reverse bullish to get the retracement, just how it works. So now this level here actually was hit, and you can say you want to sell this. Why would you want to sell this? Well, on the 15-minute chart, there's no reason not to sell it because we are in a bearish structure impulse leg, right? Lower high 15-minute. Now I wouldn't sell it here. Well, you should, you can, but based off this strategy I'm sharing with you, you wouldn't sell that. But you could. But you could. We're gonna focus on the buy if it comes back down here. Notice how this is making structure, just like I was showing you there. Every time frame is making structure. Boom, boom, boom. And let's just do this. This is a higher low on the 5-minute. Boom, boom, boom. Market makes a higher low. If it comes back here, we want to buy it. We want to buy it. Let's see what happens. Boom, hits your limits. Pushes against it, pushes against it, pushes against it. So you had some drawdown. And now, right before end of the session, let's move this over a little bit. TP hit. So let's wrap it up. What did this show me? Well, this showed me that this here, just trading this simple way, give me +3. You can't say I'm biased with the way I'm selecting entries. I showed you the tip in the beginning, and I did my entries based off limits, so I didn't have to get into too much detail and show you exactly how I would enter or why I didn't take this trade or why I wouldn't this trade. Like this trade, I wouldn't have took that trade. But based off limits, you will. So 369R, and then you're going to say this is a -1R. Remember, we're risking 1% to gain 3% in this business model. This Forex is a business, and this is your business model. So you're risking 1R. So this is 369 -1. So this is AR, meaning that And to summarize, you did, if you had a 100K trading account, 100K, and you add 8R, means that you just added 8K, which means in the last 2 days, 8,000 plus 4,000, you eat, well, 8,000 plus 4,000 means you made 12K profit. Simple. 108K here, 104K. I hope if this video helped you, like, comment, share this video, subscribe to Legal Chunks, follow me on Instagram. Let's get me to 100 subscribers. I'm at 88 right now. Let's push it, man. Like, comment, share, subscribe. I am Legal Chunks. Let's get it.